This Fibonacci strategy is all you need this year, guys. All right, if you've been thinking of increasing your win rates and winning consistently, this Fibonacci trading strategy will help you to achieve that. Okay, so in this video, guys, I'm going to simplify a simple concept that anybody can use to make consistent money. Now, this strategy is simple and is centered around Fibonacci retracement and Fibonacci confluence. All right, so let's get started. Now, for you to adopt this strategy in your trading, you must be able to at least identify what an impulse is in the market. And if you've been following us on this channel, we believe in wave trading and we centers on impulse, correction, impulse. Now, looking at this beautiful 5-wave structure that we have here, from here we have an impulse, a correction, an impulse, a correction, an impulse, a correction, an impulse. All right, so if you are a trader, believe you me, where should you focus your attention on? Where is the money made, guys? The money is not made here, the money is 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 made here. So these are the areas we focus our attention, and at the end of this video you'll be able to see how you can position yourself for this massive wave. So the first thing you need to do for you to be able to catch this move using a Fibonacci confluence is to understand Fibonacci. Now, for persons that doesn't understand Fibonacci, let's use it. So Fibonacci is a mathematical sequence number, identified by Fibonacci himself. He named this after himself. There's a lot that has to do with Fibonacci, and Fibonacci also has been proven that it can be found in nature. The connection between your wrist and your arm, the connection between your ears, and stuff like that. But here we're going to see how Fibonacci can be helpful in trading. All right, so I believe by now you should already know what Fibonacci is, and we're using a Fibonacci true. Now, for TradingView, we have various of Fibonacci retracement, trend-based extensions, and Fibonacci channel and all that. So we are going to make use of Fibonacci retracement, and that is where we are going to focus our attention on. So when you click on it, you can draw it like this and see the parameters. Now here we can see a different parameters of Fibonacci. I just want to explain so you'll be able to understand before we dive into the explaining how we use it properly. Now, if you look at my Fibonacci, yours might not be looking like this, because I'll be able to set up the parameter the way I use them. Now, for instance, from here to here, this is the retracement. These values here are the retracements, okay? Now, but from here to here, these values here are the extension. So I'm using one Fibonacci for two purposes. I'm using one Fibonacci for retracement, and I'm using one Fibonacci, the same Fibonacci for extension. And for you to be able to achieve these two parameters in your trading, all you need to do is when you have it here, you just double click on it. When you double click on it, it will open these parameters where you set your numbers. Okay, so for you to use it as extension, you put a minus, and look at the extension I'm using. I'm using 3 extension. The 3 extension is minus 0.135, minus 0.27, and minus 0.618. Okay, and I'm using 3 retracements: 0.34, 0.5, and 0.618. Now, these numbers are not magic numbers, okay? There's nothing magic around this number, and that is why we are finding a confluence, and for us to know, okay, this might go in our direction, because we believe that where two people give the same confirmation, there is a tendency that it has a high probability of playing out. Okay, so that is why we are using the confluence of Fibonacci. All right, so having set your parameters here, then what we need to do first is to draw it from the first impulse. So let's use this to illustrate our strategy before we dive into the practical market. So pick up your Fibonacci, get from the beginning of this trend and draw it to the end of this trend. All right, the end of this impulse, sorry. So once you draw it here, you're able to see, okay, where are the fib levels? Now from here we can see we have fib levels at this point, 618, we have 0.5. Now remember, we are using this fib to gauge the patterns. Understanding the pattern is very, very important. In case you've not watched the video we released on Elliott wave trading pattern, you kindly check the link below this video, because that also help you to understand what you are looking for. Now, the idea is this: we are looking for a retracement that will align with a three-wave move corrective structure, because we believe that after this impulse, the market will give us a three-wave move, and once that three-wave move is ended, then we are looking for a confluence of Fibonacci. Okay, so that is the first thing. So after you've drawn your first Fibonacci, then you need to draw your second Fibonacci. And how do you draw that? Now, we've seen also that even this corrective structure, impulse, correction, impulse, is also a trend. So here we draw our fib using this first impulse. So you can put in your fib from here, put it from the beginning of this impulse and take it to the end of this first impulse and drag it. Okay, so we have drawn our fib level. Now if I should expand this here, you can see, okay, we've drawn our fib from here to here, and we've drawn the second fib from here to here. All right, so we now watch for a confluence. Now the confluence is a point or a region where the two fib aligns. They might align perfectly, or there will be a small space in between. Now if you look at this one and if you look at this one, you find out that this is where they have a confluence, where these two align. So at this point, we are taking the trade, because number one, it confirms the confluence of the two Fibonacci, and secondly, it comes at the end of a corrective structure, and we have had the first impulsive structure, and there we go to ride this wave. I believe you understand. I will illustrate it again before we go to the practical market. All right, so take on this second impulsive structure. The first thing to identify is your impulsive move. All right, so we have its impulsive move. You draw it, putting your fib from here, you take it there, and you watch for the confluence. Now we take the second fib from the counter trend, second fib. Okay, so we have a second fib here. So where is the confluence? You look for the confluence, and that confluence must be at the end of a corrective structure. And for you to know, most times we use regular flat, because over 90% of the time, regular flat occurs in every market. So these are the confluence, and you can see the market just tag the confluence region, and there you go, it was profitable. You can see that. So let's take one more from the sell setup and see how it plays out. Okay, from here now, you take your first fib from this beginning of this trend, you draw it down here. Okay, then you take a counter fib from the first impulsive move that moves against the trend, you drag it there. Okay, I believe you understand. So what we did here is we took this, the first fib was drawn from here to here, the second fib was drawn from here to here. So we are looking for the confluence. This is very, very powerful, guys. If you understand this simple concept, you'll be more right than wrong in your trading career. All right, so you can see the confluence here. Perfect confluence. So once you see that the market are giving you a perfect confluence, you don't need to think twice. Take your trade, put your stop, and most times the best place to put your stop is the beginning of that first trend. The beginning of that first trend. Okay, you put your stop here, and you're expecting 2:1. At least 2:1 should be fine. Okay, you take your profits, and you are good to go. You can see the market actually went in our direction. So this is how we form the strategy. This is how I've backtested this strategy over and over, and I've seen that it's very, very good. So let's dive into the practical market and see how we have taken advantage of the market using this concept. All right, so this concept, this strategy can be traded in all instruments, in all markets. If you are trading forex, crypto, stock, indices, you can use the same strategy for all. Now we are using Bitcoin for illustration here. So coming here now, how would we have taken this trade? Now, before now, we took the trade here, we took this trade, we took this trade, and we took this trade. So how would we have taken it using this concept? Remember, the first thing we do is to identify our first impulse. Okay, so from the Elliott wave standpoint, we believe in 5 impulsive move in every market. So here we have an impulse, a correction, an impulse, a correction, an impulse. So these are our first impulsive move before this moves corrective structure started. So what are we going to do? So here we need to put our fib. The first fib need to start from here and take it to the end of this impulsive move. All right, so then the second fib, we need to pick it from here and take it to the end of this corrective move. Okay, so we are taking the first move from here to here and the second move from here to here. What are we looking for? We are looking for a confluence, and this is our confluence. Okay, you can see they're perfectly aligned, just small distance between them, and that was why we took this trade. So you put in your entry at this point, and your stop should be at the beginning of this move, the beginning of the move. Very, very important, guys. The beginning of the move. Putting your stop here, and you're expecting 1:2, at least 1:2. This is your take profit. Okay, so that is why we took this trade. The market came here and it started reversing. For some that don't understand the market, you can put your trade to break even. Okay, so even at that, we put the trade to break even, but here the market start giving us another corrective move. Okay, so what should we do? This second impulse, and it has given us another 3 wave. So you follow the market as it develops, as it gives you the data. Now the first impulse is here to here. Okay, now the first counter impulsive move we saw was from here to here. So our confluence here is here. You see, the confluence is not that perfectly aligned, okay, but it's fine. This is the shortest distance. Okay, so we see that we take that to be a confluence. So what should we do at this point? You put in your take entry at this point, okay, and your stop loss should be at the beginning of this trend. So where the trend begins here, okay, and you're expecting, you know, at least 1:2, which is 1.6. 1:2 will be at this point. Okay, so you can see the market actually plays in our direction. The market moves in our direction. Okay, and there it started reversing again. So you follow the market as it gives you more data. So let's see how we can take the second trade. Clear this so that your charts will be clean and not confusing. So we have the first impulse here. This is our first impulse from here to there. That's our first impulse, and we have the first counter trend. Our first counter trend impulsive move is this to this. Okay, so in case you're not seeing what I'm drawing, I'm picking from here to here, and I'm picking from here to here. We don't change the rules. Stick to the rule. Let your rule be fixed. If you want to make consistent money from the market, stop looking at the market every minute, every second. Set your rule, forget about it, and go and come back. You find out that the market, you know, is the same people that plays the market over and over. Okay, and the psychology, just like if I should look at you or you look at me, if you monitor my movement or my behavior every month or every day, you will see a pattern in my behavior. All right, the same thing applies in the market. So once you're able to see this pattern that keep occurring, all you need to do is to position yourself and you'll be able to make consistent money. All right, so we see that we're taking from here to here, and we are looking for a perfect what? Confluence. And the perfect confluence is here. You can see at this point we have a perfect confluence. So once that's seen, you put in your entry here. So let's put our entry. That will be a buy, and 1:2. So where we determine your take profit is where you place your stop loss. Stop loss first before take profit. So we place our stop loss at the beginning of this trend. Why we are putting it at the beginning of this trend? If the market should break this beginning, that means the whole move is invalidated. Okay, so we are putting 82%, 0.82% of this move, so that should give us 1.64. okay, it's even above that, 1.64, guys. You can see, guys. So this is beautiful, this is profitable, this is doable. All the question you need to answer now, can you just duplicate this on your own? Now it's very simple. I haven't seen that. So this is the way we trade, guys. You can see these three moves, you should have taken these three moves and they all be profitable just because you understand the market's psychology, you understand the market participants, you understand the market behavior. Okay, so let's just take one more as we wrap up this strategy. Let's just take a sell, a sell from this. So I think I took this tail and that's what exactly what triggers it. Now look at this sell here. Why did you take this sell? The first thing you need to do is to draw your trend. Your first trend, we identify from here to this point. Okay, we identify this point. So then your counter trend fib, our counter trend fib moves from here to there. Okay, so where should be our, we are looking for a confluence. So you can see clearly here the confluence actually align. We have a confluence that align at this point. So once you have this confluence that align, you take your sell, put in there. Remember your stop loss first before your take profit. So our stop loss here is a bit high, 2.23%. So tells us that our take profit should also be at least 4.6%. 4.6%. This is a trade, this is a system trade, guys. No emotion attached. Okay, let's just leave it at 5%. And what happened? It got smashed. All right, guys. So I believe you'll be able to understand this simple concept. Now, if you want to learn more about it, if you want to learn how to fine-tune this strategy, if you want to learn how to make it personal, because there are ways we personalize every strategy based on our individual differences. If you want to learn more about this, if you want to add it to your trading arsenal, kindly contact me below and I'll be glad to teach you, to mentor you until you are profitable. Thank you for your time, and don't forget to smash that subscription button, like this video, share with your struggling trader out there, and they will thank you in return. God bless you and see you again.